All right. Good morning. Today's Monday, August 3rd. We're going to jump right into it. On the weekly time frame, we see a big rejection of this gap structure here. So last week was a continuation of a breakout week out of the summer consolidation. Broke out, tested all the way down, left behind a huge pro bar wick, and now we're retesting the edge of the summer consolidation at 28,500. We have a weekly location at 27,804. If we can't stay above 28,500. So this is a long bias. On the daily chart, we see that the market trended lower until it hit this pro bar wick and caught a bounce. So we have this pro bar capper signature that's been left untested with the mean threshold untested at 27670, and we just bounced up. Now we're retesting the edge of the channel and the edge of the summer consolidation with a target above us. We have not yet seen the volume shift, so we could totally see volume come down and auction, and then it shift, and then it moves. We could also see it bounce here, test, and then come back in, which is probably likely. This is another bullish bias in the higher time frame until we get below here. H4. We have an untested swing into the daily target at 28,762. We see the market sold off, then caught a bounce where we had a pro bar break through the 28,000 key level and break through these key swings without retesting it yet, and bought up right through the 4-hour gap. Inversed the gap, now it's retesting back down into the 50% of the gap. So if this gap could hold in here, then we could get the target. But if it continues selling, then we have a buying location right in here. Next, on the 60-minute chart, this chart is rather uneventful. We have a last leg profile, and it's still intact. We have the last leg volume point of control down here. So the market could test into any of these LVNs and catch, or it could spike lower right into our buying location. And then it could bounce, or it could break this channel and then continue. So it's just been moving lower. It's been moving higher slowly, then moving lower slowly. Right now it's almost 8 o'clock and we're breaking our overnight low. Usually this signifies like some sort of fake out move. We also have the midnight open like way above. Midnight open is here. So a Nash channel break trade on the M15 through this defining auction location is an A+ setup. And until the market is above this 28,550 level, then we don't have the ability to get long right in here. So we see we have a gap here that's been left untested at 15. So I have a short trade against this, a C grade trade, because it's going against the higher time frame trend. but it is in alignment with what's going on in the auction. That brings us down to the 1 minute chart. Which shows this defining point in the auction, which I will mark. This color is kind of not doing great against the red. Maybe I opacity 100. Is there another type of orange? Yellow? Yellow is kind of nice. Save. Let's call this caution yellow. Yellow's nice. Very noticeable. Okay, so we have continued selling here. So yeah, we're just selling. On Bookmap, we have resting liquidity here at the right above the defining auction structure. All right, that's our plan. So we have an H4 rounded pullback gap long at 28,170 to 28,000 basically. We also have this 4-hour gap. We're testing the 50% line right now. So I wonder, I don't really have a vetted higher time frame inverse gap structure like in this context. So Not really going to worry about it. What else was I about to do? Yeah, let's mark this. Probar structure blasted through. Do we have any morning news? Monday, ISM, PMI, ISM. PMI and ISM at 9:45 and 10. All right. That's our plan. Feeling really well rested this morning. Period. Woke up and set my schedule today, which is unlike other days where I know what's happening before I wake up. Period. So instead of waking up and stretching, I just woke up and came over to the desk because I don't have a lot of time to be here today. Period. Still got my meditation in and feeling motivated and ready to become the best I could be. Period. Today, let's focus on annotating charts and quality of my execution. Period. By leaning into journaling and valuing exercise more than journaling useless trading, I can sit here patiently and not act until my trade appears. Period. Higher time frame bias is transitional from lower to higher, but the M15 bias is Nash channel continuation lower. On the M15 chart, the market puts in a defining auction structure to the selling side. To break the prior swing low, period. On the 1 minute chart, we see the market retests the pro bar gap left behind, can't push beyond the 0 line, retests the low, leaves behind a double bottom with a huge pro bar capper. Period. The market one tick picks the swing high and then sells right through the capper. Period. According to this study, this sample does not meet the criteria because it's not a full capper. Only the second candle is blue, which makes it an initiative capper. Period. It looks like a strong signature, but it feels different because it's clearly against the flow of the market being below a freshly put in resistance. Behavior zone. All right. Want to move lower, huh? All right, so I'm going to do 50 pull-ups and then lift heavy. So in 15 minutes, we're going to have potentially a Frightener continuation gap. But the thing is, the market on the M15 chart just picked here the swing. And now it's putting in major volume above and also We have this defining auction structure here. And we have this gap being left behind. So if this candle could push here through the 23, then it could be game over for the shorts. On Bookmap, we see large liquidity holding price down at 28. If this is left untested down here, it could be a potential long. The reason why I say that is because of this 4-hour chart. We could blast up above this 50% of this gap after inversing it. And after this big sell-off, if we can get above the 22, if we can get above the 22, leave this untested in here. And then on the 15-minute, if we could close inside, then a retest back into this 03 is a very nice looking entry. And this trade would be right side of the V continuation trade. Right side of the V. My best performing strategy right now. Doesn't mean anything though, because I don't have enough data. The rules of this trade. Market successfully defends a rounded pullback gap, which we have on the 4-hour. Fresh M15 Pro Bar gap made in the same direction. We have this gap made in the same direction. Market moves more than one impulse away. No stack gaps. A Pro Bar signature forms inside or within one impulse of the fresh gap. I don't have that part of the rule because it's a continuation trade. I don't really have like a way in to inverse gaps because I don't have a strategy for it specifically. The only thing that would have to be different for the right side of the V gap. Wow, that's a nice push. Nice signature on the M15. Kind of unexpected. It's time to develop strategies for inversed probar gaps. M15 plus. And we have great risk to reward on this. It's coming in. All right, so that was broken. So that may miss. We'll see. We have this M15 gap. So let's see what happens at this M15 gap. I have vetted strategies for pro bar gaps being inversed. So it's just time to write those strategies up. Kind of conceptualize them if they're going to be like right side of the V. No, they probably won't be right side of the V. Wow, Nash channel continuation trades. Right now I'm 0% winner on 6 trades. It's pretty bad. We have 5 minutes until the closure of this M15 candle. And I mark this as a missed trade. There's 23 again. Wow. Market misses my entry. Move entry to the untested location at 28403. All right, so we have this big gap, big wick here, pro bar wick. This is untested area. It should not be tested. Market slams 23 and reverses without me on board. Inverse gap retest. I think that's what the name of this strategy is going to be. Inverse gap retest. M1 pro bar V-pin gap. The first time I missed the setup is because the market did not test into my limit order, which was 2 points lower at the 50% line, period. The second time the trade was missed was because the market slammed lower right into my entry location. But at that point, I had moved the entry. Because it seemed like the market should not test below the capper that it put in at the M1 gap, period. Yeah, it's a high quality location for a pro-bar break of structure. After that location missed, I moved my entry all the way down. All right, so look what's going on here. If that breaks, it's going to push right into this spot here. Untested location at the channel edge with the swing here. So this should probably be much smaller. Should be like a $70 risk, not $120. And we'll look to get our risk off. We got our first target in here. It has great risk reward still, but it's not like an A+. It's a B grade trade. Into the primary gap that also had a slightly untested location. period. Original. Canceled the order. If the location is untested, then the question has to be asked if it is still a valid location or not. Very clear. Probar change in the state of delivery through the defining auction structure, period. H4 retest into the 50% of the inverse sell gap. Inverse H4 sell gap. %, line being retested. I don't have a playbook for this trade, which is the worst part about this setup. Period. But it is a structured trade for me still. I just have to create the playbook. M1 pro bar VPIN gap. Yes, this trade was actionable and I had the order set. It just was not filled on the first test into the gap. Period. Then I canceled the order because I rationalized that the area should not be retested. But the market slammed right into the location before making a full reversal. I have to ask myself if just because the location was missed, it is now considered invalid. Period. Just because there's an M1 capper that held the 25% line of the gap does not mean that it can't test lower into the 50% line like I frequently observe the market do. I could benefit from having more conviction in my locations. Changed sizing according to setup quality, comma, but did not have awareness of original size, which was larger than I would like. Period. Need to develop awareness surrounding size. I learned that I have a new opportunity for creating a structured playbook with vetted setups, period. I recognize that extra conviction in my location that was left untested would have led to a winning day, period. The number one question I should be asking is the location still considered untested? To maintain or build conviction, all right, I have to go now. You see that behavior? So the reason why this could be a location is because of all these gaps left behind and the last leg here and the channel edge. But it's just too sloppy at this point. All right, I have to go. GG.